evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 14th, 2012. Um, Not too much to talk about. Everything's pretty much status quo, but let's get started. This is a chart of the SPY, which is which is the ETF that tracks the S&P 500. Let me load these drawings in here and just from today's action, so yesterday, Monday I said we probably will have an up day, and then Tuesday I probably said we'll have a down day, and then now it's Wednesday, said we'll probably have an update, and if it did, well, actually yesterday, if we did have an update today, hopefully, sometime maybe Friday. I doubt we'll get it on Friday. In fact, we might actually get a sell-off tomorrow. But tomorrow is known for being low volume, and you all know with low volume, it gives a chance for institutions to prop the market higher, as we've seen before. However, I still have my eyes set on this 135.44 level. If we can get there either tomorrow or early next week, I'll probably take a short position. Not a big position, obviously, but definitely a short position. And I'm going to get my toes wet. We still have this 139.98 level here. I doubt we get there. But, anything's possible. So I definitely will be shorting at 135.44. And if we reach this 137 level, then I'll probably stop myself out and wait for this 139.98. Will we get to this 135.44? I don't know. But if we do, then I'll be taking a short, but until we do, I won't be doing anything in this market because everything's just been so volatile. I said this week we will be having a volatile week because this is the week that options expire, which is tomorrow, and as you can see, we've just been choppy back and forth, back and forth. And if you look at today's candle, it just looks like a normal candle. It looks like this candle here and it looks like this candle here. Not a big difference. Yesterday's candle wasn't a big difference either. Obviously, Monday's candle was a big difference, but then other than that, all these candles look the same. However, when I say it's going to be a very volatile market, it's going to be very volatile. Seriously, in all honesty, we've been just trading sideways. We have this up move here, and then we are just bullishly consolidating before another pop higher. That's actually what I see. That's what the charts are telling me. We have not been able to drop below this 20 moving average. This 20 moving average has been holding up. In addition to that, we have not been able to even come close to trading back within this descending wedge here. So this tells me that we do have possible bullish movement as of now. We do have the Greek elections over the weekend, so we have to be prepared for that. Now the question is, will people be holding over the weekend tomorrow, or will they be dumping their stocks? Either way, if they dump their stocks tomorrow and then we can prevent from closing under this 20 moving average, then we'll definitely be in some strength for maybe early next week if we get some good news to pop into this 135.44 level, in which case I'll be taking a short. We do have this 50 moving average here that's come down to this 135.21, but again, this 135.44 is a mathematically calculated level, and it has not changed even with the moves in the market today. So, what do I mean by it being volatile? Well, as you can see, during just for swing trading on the daily chart, it is pretty volatile. But let's kind of take a look at the intraday. Before I switch to the intraday charts, keep your eye on this 382 Fibonacci level. This is the purple line here. Okay. Now this is a 10-minute chart of the SPY. Let me just zoom in just for today's action here, and then look at that. So we started off gapping up, and then we kind of dropped a little bit before going higher. So we have this up move, and then we have bullish consolidation. We have an up move again, but this was not a direct. This was kind of a slanted move, so this isn't considered a bullish consolidation in my opinion. So we traded sideways here. This is somewhat of a bearish consolidation pattern, but not really, because we didn't come straight down. So you notice the patterns there. We come straight up. This is bullish, so they came back up again. Now we just kind of traded sideways, and then we took a dump here, and then where did we go? Right into this 382 Fibonacci level that I showed you on the daily chart. After that, we went from the low of 132.64 to the high of 134. That's pretty much like $1 and change in just 10 minutes. This is 10-minute channel, 10-minute candles here. Just all of a sudden, we hit this 382 level. They released news at this is 3 o'clock p.m. Okay, so just remember the times they release news or rumors or whatever the case may be is always around the 10:30, and then the 3 o'clock time frame. Now, keep in mind, in the previous videos, I mentioned before that institutions will do anything to prop the markets higher to stop out all the people that are short, because everybody is short the market. Obviously, we have more puts than we did calls. So now, basically, in all fairness, the institution. I mean, the markets are just weak. I mean, no matter what they did, they couldn't prop the markets higher. So I wouldn't say maybe this is not the institutions that released the news, but someone released the news, and it's definitely just it's not confirmed. It was a rumor at this time. Okay, so the rumor came out that they were gonna do some sort of thing with the banks and stuff and whatnot. Who cares? What the point is, we hit support, which is 382. We got a huge pop. Okay, now when you're sitting in the monitor and you're watching this candle go up and up and up and up and up within 10 minutes, within a 10-minute time frame, you're definitely, you don't want to chase after this. I mean, after you see this move just start flying up, a lot of people, okay, like probably all the way up here or maybe over here, they all jumped in thinking that the next candle is going to go even higher and higher. Instead, what they do is they whipped everybody out of the market. So first, they whipped everybody that was short out of the markets, which is up here. Okay, at this time, I got stopped out of Walmart. I got stopped out with a profit because I had an in a money stop on Walmart. So I did get stopped out on Walmart. I'll get to that later. And then people who went long after they saw this candle, they whipped them out going short by bringing the markets down. So the people who were long got whipped out because they went long, and then they all got stopped out and they lost money. And then what they do, they whipped it right back up again. You see that? So that's institutional game playing. This is definitely not something that a retail trader is able to do, especially in such a small time frame. Even in a bigger time frame, retail traders will not be able to move the markets such as like this. I mean, you need billions and billions of dollars to move markets the way the markets move today. So on the daily chart, it looked fine, but on the intraday, which is 10 minute, each candle here is 10 minutes. I mean, we had a lot of volatility going on, especially since 3 o'clock to the end of till when the market's closed. Okay. So I just wanted to emphasize on this week and any other week that the third Friday of every month is going to be the Friday that options expire. Okay, so that means that normally those weeks are going to be a lot more volatile than other weeks. This week, is exceptionally more volatile than other options expiration weeks, but more than normal. It's just a higher rate of volatility when it falls on the week that options expire. Okay, so this is the SPY. Right, this is a chart of the dollar. Okay, let me load my drawings in here. Okay, so we had this resistance point up here. Again, I still have this 85.23 level here. That's still a possibility. I did mention in the other video that we might be bullishly consolidating before we get another pop-up. I'm not so sure we're going to do that anymore, simply because we've closed below this 20 moving average here. That kind of negates the bull flag pattern, in my opinion. Now what we've done was we went right into this pivot support line here, as you can see. Let me just kind of zoom in here. Let's bring this down. We went right into the support line and we got a small intraday bounce there. Okay, so is there a possibility that the dollar could come all the way down to this target here, which is what I kind of talked about in the previous video? Yes, definitely. We are going to get support, some support at the 382 Fibonacci retracement. I don't, in all honesty though, for the dollar, they really got to sell off the dollar, because intraday, if you notice, let me show you intraday what happened. Okay, this is the intraday chart, which is the 10-minute chart of the dollar. As you can see, the institutions were just killing the dollar. They were just demolishing the dollar, and the markets, could not catch a bid. You see that? So, obviously news would have to come out in order for the markets to catch a bid. Okay. So back to the daily chart of the dollar. Again, well, this candle here is after hours, so you don't have to really worry about that. But this candle was today's candle. We broke down from the 20 moving average. We're gonna have to get past this support level here, and then we'll hit the 382. And then in that case, I mean, I don't know if we're gonna get to this 50 moving average. I mean, it's a far ways down. But if they really try to sell off the dollar to get dollar to pop the SPY up, or the markets up, then that's what they're gonna have to do. Other than that though, I don't think it's gonna be able to pass there once it gets there, and that's if it gets there. Okay, but if it gets there, then definitely I'll do the inverse on the markets and probably take a short if it can get there, and at the same time it hits the 135 level. Now if it hits a 139 level and hits this area here, then yeah, I'll definitely take another short on the SPY. But we have to take it day by day, and so far right now I do not see a bullish a bull flag pattern anymore. It looks like that we could break down lower. What we do have, that what I can see is a higher low here. And if we can make another lower low, then the trend, I wouldn't say long term would change, but short term the trend would have changed. But I don't think it's going to be long lived. Okay. This is a chart of the VIX. It's so funny because yesterday I said we're gonna need to confirm above this candle before we can validate that it's back into this channel. Again, we did not confirm, and then now we're back below this channel. Isn't that amazing? I mean, that's why you don't want to you want to have confirmation before you solidify any type of movement. We went right into this 200 moving average, and then we just bounced right off of it, and we came down. And in all honesty, I could actually take this rising trend up here and I just look at it this way. What is this? This is a bearish consolidation pattern, and it looks like it's kind of already almost breaking down. It could be actually be attempting to break down already, but we do have this 50 moving average here. I don't think it's going to be very strong. We still have this 1949 level there. I do not think that's going to be very strong, but we will have some support at this level here. Okay. As far as stocks go, I believe everything is status quo. I didn't get any alerts. This is a chart of Walmart. As you all know, if you've been following my videos, I was short Walmart. Today, after that spike, I mean, it looks normal today. As you can see this, it looks definitely normal, nothing new. I mean, it looks like still like you have a up move, and then actually you have a down move, and then we're consolidating, so we actually could drop a little bit more, maybe into this 20 moving average before we get a spike higher. But I did get stopped out, not for a break even. I got stopped out for I got a in the money stop. Okay, meaning I got stopped out and I made 20% profit. I was going for 40, but obviously it didn't get there. Now let's take a look at the intraday here of Walmart. All right, this is the 10-minute chart intraday of Walmart, and let me zoom in for today's action. As you can see, when that SPY popped, so did Walmart, and it pierced the 67.70 level. You guys remember the 67.70 level that I had in, since I started making these videos. I had this resistance line. I mean, Walmart went into it once, went into it twice, went into it 3, 4, 5 times, and it's pretty strong support. So in all honesty, Walmart is right now in relative weakness in comparison to the SPY. I mean, the SPY had a huge pop, and the Walmart went up, but not very much. So anyways, when the SPY popped, so did Walmart, and we went from the low of 67.47 to the high of 67.79. I mean, that was a pretty huge pop, especially when you have an ATR of 13 cents. So after we actually got right here, it's almost as if the institutions knew where my stop was, and it stopped me out. I took a 20% profit, and then it came right back down. It was kind of funny, but you know what, that's trading. That's the way it is. No sweat off my back. That was a profit's a profit, not a big deal. So we have this larger term bullish consolidation, or bullish bull flag consolidation pattern. I do have a level here which is $78.56, which is the next level, which I will be taking a short if it gets there. Okay, so if we get another pop in the SPY, and the SPY reaches the 135 level, then hopefully Walmart will get to the $78.56 level, and then in which case I'll short Walmart again. It's not really good to short strong stocks like this, simply because if the market ever catches a bid, then these are the stocks that are going to go fly high, just like kind of like a good example would be Apple. However, you know what? I'm out of Walmart right now, and then the next target is $78.56, and the SPY is 135.44. And until it gets there, if it gets there, then I'll take a short. Until then I'm not. A lot of people would say, why won't you go long here then if you expect it to go to 78.56? Well, because I'm not sure if it's going to get to $78.56. Just like the SPY, I'm not sure if it's going to get to the 135.44. I mean, it is bullishly consolidating. However, I'm not absolutely positive. But what I am not really sure of, but more the odds will be in my favor, is if it does get to those levels, then taking a short will put the odds in my favor. It doesn't mean you're going to win all the time. It's just like when you play blackjack and you count cards. You're not going to win every single hand, but what you're doing is simply putting the odds in your favor. So majority of the time, you will win more hands than you will lose. And that's this game. That is how you play it. Okay, so that's it. Pretty much everything is status quo from my other videos. We'll see what happens tomorrow. Tomorrow's going to be pretty much a big day, because it'll kind of tell us what everybody's going to think is going to happen with the Greek elections. Monday is definitely going to be a big day. So next week will be, Monday is going to be, tomorrow's the last day of options expiration. So Monday is going to be a big day, because then hopefully we get a pop on Monday based on good news. If we get it, if we don't get it, then the markets will come straight down already, right? But if we do get good news, then Monday, Tuesday, hopefully we get a pop, we get right into our levels, and then I'll be taking a short. Okay, so good luck to you all. God bless, and thank you for watching this video, and hopefully we'll see you in the next one.